Coming up next is a very interesting discussion on the topic, a tectonic shift of capital towards innovative and sustainable future. Our speakers for this session are Radhika Gupta, CEO and MD Edelweiss MF, and Steve Streit, founder SWS Venture Capital. This session is chaired by Chandra Ranganathan, editor Tech, Startups and New Economy, Moneycontrol, who's a renewed journalist and writer. Radhika is an investment professional with a range of diverse experiences across asset management, globally and in India, which includes startup and global giants, public and private sector, and institutional and retail clients. Steve is an award-winning serial entrepreneur, the founder of Green Dot Corporation, Putty's Way Foundation, and now SWS Venture Capital. He is best known as the inventor of the prepaid debit card industry. Over to you, Chandra.
Thank you so much for that introduction. I'm delighted to welcome all of you to this fireside chat. The theme of the discussion, like the MC said, is a tectonic shift of capital towards an innovative and sustainable future. Joining me on this panel then to take this forward, I have two very special speakers, Radhika Gupta, the MD and CEO of Edelweiss AMC, as well as Steve Streit, joining us all the way from the US, SWS Venture Cap. He, of course, is a veteran as far as the fintech space is concerned. Thank you both for joining us at this session of the NTLF. You know, the last 2 years have really been tipping points as far as the Indian startup internet ecosystem is concerned. The government recently released data which was quite remarkable, which said, 75% of the country has at least one startup. And we minted more unicorns in 2021 than the last 10 years. So clearly there is some seminal shift underway that's here to stay, and this enthusiasm also played out in the public market. Investors got their first taste of the new economy, so to speak. So I'd like to ask both of you about the tectonic shift that's already happening in the private and public markets, and with more money chasing innovative business models, and the similarities or the precedents that you see between what's happening in India and what has already happened in mature markets such as US and China. Radhika, perhaps you can start, and Steve can give us the global picture.
Thanks, Chandra, and it's a delight to be here. And as I come to your question, I'm also really looking forward to hearing the perspectives from private markets and especially the US market from Steve. But I think 2021 has definitely been a landmark year for new age business models. I think going into the listing of India's first food delivery company last year, there was a lot of skepticism about how this whole movement would sort of pan out. And while we can talk about what has happened after that, I think it's a fact that a new leash of businesses, a new set of businesses have made their way to the public markets. The public markets have never seen this kind of capital. And I do think that, these kind of listings, innovative business models coming to private markets, of course, and also to Indian listed markets will continue just because India has seen so much private capital and public markets are actually, the only meaningful route that it has to exit given the size that some of these companies have. In fact, I think last year, the capital raised by IPOs in India is the highest by over a significant margin. So I think, one, the landscape is very exciting and will continue to be very exciting. Although I think 2022 will also pose its challenges as global liquidity conditions are perhaps a little less favorable. I was also looking at some data from China, Chandra, and I think what is happening in India at some level is also inevitable. I always say that in our listed markets, India is such a nascent market that many of our major industries are still not represented in our public markets. I mean, even today, with all that's happened, you don't have India's largest exchange listed, and you don't have a whole host of new economy sectors. If you look at a market like China, about 60% of the market cap is now new economy sectors. I think this was about 20-25% a decade ago. So what we're seeing in India in that sense is inevitable. It's happened in other emerging markets. It's also happening in other markets, by the way, like South Korea, Indonesia, and I think it will continue to happen. And there are reasons to believe it will continue to happen. I think the China crackdown, and I'd love to hear Steve's perspective, has definitely also helped. China accounted for less tech IPOs and investor interest than India. I think for every dollar that went to China tech in September, 1.5 now went to India. And of course, the acceleration of data adoption, a lot of things, and I think, trends accelerated by cheap data, digital adoption, and of course, COVID and easier listing regulations make this easier. So in short, I think a very exciting 2021, all set to continue in 2022. And of course, we'll talk about, how these businesses have sort of done in public markets and the element of sustainability, I'm sure, later on the panel.
Yeah, very interesting points there from Radhika. And in fact, Steve, if you can weigh in on the US perspective and the China perspective. I was speaking to an internet entrepreneur, Sanjeev Bikhchandani, recently, and I said, X number of unicorns in 2021, what would your prediction be for 2022? And he said, it really depends on the US Fed. That's what's driving all this. So do you think the gravy train will continue? I mean, zero interest rates, 7% inflation. Tech stocks are already taking a beating if you look at the sentiment wise. And Radhika also brought up an important point on China. The crackdown on China tech, in a way, seems to have helped India. So it'll be wonderful to get your perspective on this, on where the capital shift is happening into innovative and new businesses.
Sure. Well, I think you all know, as you mentioned earlier, that SWS Venture Capital is focused primarily in the US. We do have an investment, some investment in China and the UK, but primarily it's the US. We have a little bit of exposure in India with Polygon or Matic, the cryptocurrency, although it's a relatively small investment. So we can't speak with authority on India venture capital per se, and clearly Radhika has that down pat. I thought that was a fascinating response and I enjoyed it. But here in the US, there have been sizable exits and high public market valuations that have inspired all the large institutions to do more and more. And the more money chasing the quality companies, the higher the valuations. And it can get a little bit, I want to think about how to say it. It sometimes is hard to figure out the fundamentals or why the valuations make sense for one company versus another. Whether those lofty valuations, Chandra, as you mentioned, whether they stay that way and sustain over the next year or so remains to be seen. We're seeing some evidence that it's cooling off a little bit, but we're not the biggest venture shop in the world. And so, others would probably know better. But we expect that, large open economies like India will have huge opportunities forthcoming. India feels like it's just warming up, or that's what it feels like to us. Whether or not the gravy train, I like that expression, whether or not the gravy train will continue is my sense is the gravy is getting maybe a little bit hot and dry. I'm not sure. The Fed has announced a tightening of monetary policy. They've been thoughtful about it, I think, and have given people lots of heads up. There's no surprises. And I think the Fed has communicated clearly what their concerns are and what their goals are. The inflation has, I think, surprised most everybody, not just the sheer size of the inflation, but the consistency of it month to month. And that, I don't think, will help valuations in the long term. But, the market still is in that range. It's come down a little bit, goes up a little bit. I think investors are getting used to it. So it's hard to call. Hard to say, but I do think the train is slowing down perhaps just a little bit at the moment.
Okay, train is slowing down perhaps just a little bit. So Radhika, will that then, shift focus to good old things like cash flow and viable business models, something that investors didn't really seem to care about in the last year. We saw dizzying valuations and startups raising subsequent rounds with huge markups. Do you think, that kind of sentiment might take a beating, that, investors will look for more sustainable business models?
Look, I think it's inevitable. And, just before I come to that, Steve, I have to tell you, our central bank has been a little more dovish about rising rates. But I do take Steve's point on global capital coming away, coming down. I think one point, Chandra, I forgot to make in the previous answer is that the startup wave in India also unleashed a new wave of investors. So when some of these listings, by the way, happened, there was a question, is there enough demand in the Indian market to absorb them? We saw foreign investors who had never invested meaningfully in listed companies coming in because of some of these listings. You saw a large wave of retail coming in, which hasn't participated in that kind of quantum. You've seen some activity from hedge funds and sovereign wealth funds. So the spate of capital participating in India also went up. And I think those capital providers will become more judicious as they look for things that are more sustainable. Now, we're also a little unfair when we say, it's cash flow time, etc., etc. I think the way to think about it is that there is a life cycle that every company has. At some point in a startup's life, the market rewards, the private market or whatever it is, rewards the element of story. They reward the element of growth. Then there's a natural transition to customers, but that transition from story to growth also means a transition from users to revenue, and finally revenue to EBITDA. I mean, it is almost a law of financial gravity. So I think for anyone in the startup space, it's very important to understand that there is a life cycle and you have to move along the life cycle. The market will give you time to understand narrative, but at some point it will start asking questions. And nobody is demanding profitability today. I think if you look at even the new age listings in India, and as Steve said, the gravy is cooled down a little bit here also. I don't think the expectation is turn profitable today, show the kind of profitability and margins that some of our large banks or old economy companies are showing, but show a path to revenue and profitability. I think the direction is far more important than the absolute, because one of the reasons you also value startups the way they do, or new age businesses the way they do, I shouldn't say startups, is the element of growth. So I don't think the transition needs to be that drastic, but I think you have to understand the element of life cycle. The other thing I would say, which you alluded to, is that, unit economics have to be clean and you have to tell a clean story. So when I saw some of the listings last year, I heard comments like, the market doesn't understand our business model, et cetera, or how we think about unit economics. I think if the market doesn't understand your business model, you're not ready to list it, or you need to do a better job telling your story. The market doesn't understand my business model is a little, it's not wise to list in the capital markets, if that is the case. So you need to have a clear case for unit economics. Loss leaders, by the way, happen in every business. But if there is a plan to build a loss leader and cross-sell, you need to show evidence of it. Finally, I think the public markets reward you for telling a story, executing on it, and doing it with some amount of consistency. I mean, it is just that. And I hope to see that happen, because if it doesn't, honestly, I think the gravy train may come to an end prematurely. There's so much excitement, there's so much momentum in India. The tragic thing would be to see it stop too early because the initial experience hasn't been great.
That's an amazing point, Radhika. And, we've seen this play out, right? I mean, Indian retail investors have been pretty discerning in the way they view internet IPOs. They've invested in some, they stayed away from others, and they've punished some others as well, despite the narrative and the story. So, they vote immediately with their money, unlike VCs who might have a longer time cycle. But, Steve, one thing that's often been said about innovation or even startups in India is that there is not much innovation. These are essentially mental models of the West. So there is a delivery hero in India, there is an Amazon copycat in India, and an Uber copycat in India, and so on. So do you think startups should start solving for India? What opportunities do you see in sectors such as agriculture, health, environment, and sustainability?
Well, I can't speak too greatly about India, and Radhika, your comments are fabulous. I'm agreeing with everything you're saying about the startup path and telling your story and having a clear path to profitability. But I can't speak to India per se. But what I will say is, if you're a founder of a business, you have to have a problem to solve. And that problem to solve, if there's a large enough TAM or total available market in India in a given industry, then go for it. You can always expand out of your local region. That applies to really any region. So generally, businesses tend to start at home and then expand as they get acceptance and they can go to a broader audience. But India is, such a huge company that I would think that if you're solving a problem and there's a way for consumers to pay you to solve that problem and they want to do that, you'll be successful. And that's really what all startups are there. It's about identifying a key pain point with the customer and then solving it in some elegant way that people want to pay you for. That's simple, really.
Right. A follow-up question for Steve and Radhika. Steve, you mentioned Polygon. Interestingly, we spoke to the founders earlier this week, and they said that they want to be the AWS of Web3. So that's the scale of their ambition. What potential do you see for Web3? Because there's a lot of excitement around that in India, around cryptocurrencies and Web3. We'll have to see how the policy evolves. But what opportunities do you see for entrepreneurs there? Perhaps Steve can first and Radhika can take over.
Sure, yeah. Well, we're bullish on crypto and Web3, and we're excited about the potentially large opportunity within that space. The underlying technology is creating an ecosystem that we believe could be as big or bigger than the internet was back in the 90s. We'll have to wait to find out. And, some examples of opportunities for entrepreneurs in this Web3 and crypto arena could be DeFi or decentralized finance, which we've all heard a lot about. Right now, of course, money flows through central governments and banks, but DeFi using cryptocurrency hopes to decentralize it and make it a truly global monetary system without any one government calling the shots. There's a lot of wood to chop, to use an expression, before we get there, but we believe it could be a very worthwhile crypto use case. NFTs, which at first, my own personal opinion, started off as being more of a novelty, we think have real purpose in industry over time. Beyond the current use case of art and other things, potentially limited use cases exist for NFTs, for anything that involves proof of ownership or verification of authenticity. So we think that could be a growing area, and the companies that provide the platforms for NFTs, like Ethereum, are very helpful. Another area is gaming, leveraging the immutability of blockchain so that game designers can create in-game items and rewards that are unique and transferable. And that's another big potential use. So we think we're just getting into the whole new world with Web3 and crypto, which, while different, we think can combine to create something pretty big.
Right. Radhika, interesting dichotomy at play in India. I mean, on the one hand, the crypto enthusiasts were very gung-ho when the government finally came out and said that, you will be taxed at 30%, because they felt that it gave them legitimacy. But if you look at what the RBI governor said yesterday, he said, investors are putting money here at their own risk because there's no underlying asset, not even a tulip. That's the analogy he used. So how do you really
That's a great
See,
quote.
how do you see the Web3 and crypto universe evolving in India, Radhika? Is it only a matter of time before we have to adopt to this new world?
So my opinions on crypto as an asset class have been out there, and I've got not as much flack as the RBI governor for Tulip, but some amount of it. I think the budget was a very positive step. Look, we lived in a world, I think, pre-budget where, and blockchain is a whole separate element, and it has its many uses, and Steve covered some of that well. But as far as crypto, I think pre-budget, we lived in a world where there was tremendous proliferation of this asset class. I mean, you talk to the average individual in India, they were probably not an equity investor, but they had become a crypto investor. So you had proliferation of this asset class, yet you didn't have and this currency, and you didn't have a clear regulatory environment about it. And the question mark was, what are people doing? And is anyone watching over this? Keep in mind, India is also a little bit of a different market from the US in terms of financial literacy. So when things go wrong here, especially with the common public, the amount of noise value, so you have to be careful with financial instruments. I think post-budget, taxation does not mean legitimacy. And I think the finance minister came out and said that. But I think whatever happened in the budget, two things were clear. One, there is an understanding from our government that crypto assets, virtual digital assets, whatever you want to call this is a beast that has gotten large in size, and it needs a tax and regulatory framework. So I think as a regulatory framework comes out for financial assets, actually things will get better. And I don't think there's any challenge with cryptocurrencies as long as it's regulated and done for the right reasons. Incidentally, it's taxed the way gambling income is taxed. So there's an interesting one there. But there's now a digital rupee, and I think that has tremendous potential. I mean, India has already been, Chandra, a leader in digital payments. There's a lot that we already have things like UPI. There's a lot that something like the digital rupee can do in terms of our broader payments and digital finance ecosystem. So I think that is a very, very positive development. And I don't know when the digital rupee will come out, because the governor seemed to suggest that might take time. But I think that movement will create a lot of opportunity for businesses.
We think that the regulation, and you're right, taxation is not a self-regulation, but it is an admission that this is some sort of asset. You can't tax air, so there must be something there. In the United States, they're just getting started on how to regulate it. We think that's a very encouraging thing. Government regulation does imply some legitimacy, does imply some future use case. We think rules are good. We think regulators are good. We think referees are good. Because without that, you don't have a game, you just have a brawl on the field, So we're very positive about that. It reminds me 22 years ago when I started Green Dot, and we came up with this product called the prepaid debit card, which nobody knew what it meant, and regulators didn't like it, and everybody said it's a fly-by-night thing, and what is it and how will it work? But 7-8 years into it, when we became too sizable to ignore, that's when the regulation did kick in. And then later with the CFPB and the other consumer organizations, that was very helpful to not just Green Dot, but it helped build an entire industry, because state governments and others felt that, okay, this is safe, this is legitimate, it's codified in the law and in regulation. And so we feel good about using it. We have a ways to go with crypto, but I do think that the regulation and use cases as they become more clear will help the overall industry.
Right. And, typically regulation has always followed innovation. So I guess that'll happen here as well. But Steve, we also live in an increasingly fragile, fickle, and if I look at the Web3 and the metaverse world, an increasingly esoteric sort of world. So what would your advice be to entrepreneurs who need to build in a world where things are never normal? It's not a new normal, it's a never normal world.
Yeah, well, we the entrepreneurs we work with and those we invest in at SWS, they have some things in common. Number one, they have a true mission and a true problem they're looking to solve. It's almost hard for me to express how important that is. It sounds obvious, but every so often, actually many times, you'll meet with an entrepreneur and they're passionate about being passionate, but there's no story, as you said so beautifully, Radhika. There's no narrative. And then even if you pass that, it's how do you make money? And how, and if you make revenue, how will that revenue scale with your gross margins, and then one day down to EBITDA? And a lot of people struggle with that. It's like, well, if we build it, they will come. And the answer is maybe, but not we're betting money on it. So we advise our entrepreneurs to hire solid, mission-oriented people who believe in whatever their product is, its company. We like companies that have multiple revenue streams, because there's many ways to play with margins if you have other revenue streams. One-trick ponies are very difficult to run, and they almost always hit a wall. And so it's important to have that. We advise our entrepreneurs to monitor cash flow. I know that sounds old-fashioned or boring maybe, but a lot of companies get in trouble on burn rate and realize that their balance sheets are too thin. Then they get into a crisis and a rush to raise more capital. And of course, that's a horrible place to be to raise capital when you've not watched your P's and Q's, if you will, and you're short on cash. You don't want to be investing it then or looking for cash in. So we really make sure they're monitoring cash flow and looking at their balance sheet in addition to revenue and gross margins over time. Use benchmarks and KPIs. These are obvious things, but track everything and set ambitious but achievable goals. Don't be pie in the sky, with a clear but flexible plan on how to get there, because you will change whatever you think your business model is. It will absolutely pivot at some point, whether it's year 1 or year 4, you may not know about, but you want to be somewhat flexible. And then, as I mentioned earlier, make sure that whatever your revenue is and your cost of goods sold delivers a gross margin that's healthy enough on a unit economic basis to, at scale, deliver profit and EBITDA, because ultimately you'll have to have earnings. It may not be in day one. And for some companies, if the idea is big enough and the progress is demonstrable, like Amazon 20 years ago, then you can get away with that for a long time because people can see the payload coming. But not all companies do that. And those are the ones that when they get into trouble, they get into trouble fast, whether they're public or private, and you see their viability and their valuations just plummet.
Right. I was just joking to someone yesterday that, a lot of these are burn now, earn later business models, just like how you have buy now, pay later. But Radhika, one topic that you're also very passionate about is culture. And, we've spoken about the tectonic shift of capital, but let's also talk about culture. How does one scale culture as organizations scale? Because it can get bad very fast when you have too much capital in a very short period. So what are your thoughts on this?
So, and by the way, I have to say before I start this, I love that line from Steve. I'm going to steal it. You can't just be passionate about being passionate. You actually have to go solve the world. It's the best thing I've heard today. It's just fantastic, Steve. But
thank you. You may have it. You may have the line.
Thank you. So Chandra, before I come to culture of today's startups, I think you have to give the tech industry in India some credit. And we're sitting here at NASSCOM. And if you look at the tech industry this country has produced, and some of the companies that came out of, the early 90s, whether it's your Infi, Wipro, all of that, look at the impact that they had, not just on being great wealth creators, but they were benchmarks for governance. These are companies that reported first in the listed markets. These were companies that were solid foundations for professionals. These were companies where entrepreneurs were pictures of humility. These were companies where founders went on and there was great succession planning. So I think India already has a great model for the tech industry contributing to culture, governance, and checking all the right boxes. And I think sometimes in new age tech, we forget the contribution that old age tech has made and check the boxes. So we have a great model right there. And I just wanted to start there. Now, I think today's entrepreneurs are perhaps building in more challenging times. It is easy for large amounts of capital. And I know you come from the media world, and all the media that there is the joy of becoming a unicorn, the spotlight, etc., to let it become very heady. And I think that is the risk, and that's what we've seen some of. I think the things to think about on culture are very standard. One is that startups often rise, especially today, being very, very founder driven. Founders are very, very active on social. There's a big cult of personality, but eventually, and as you make that transition in the life cycle that both Steve and I talked about, there has to be that element of succession planning. This sounds very basic, but having your basic finance, audit, all your core functions really running independently, and not being founder controlled, I think that is extremely important. Having a sense of process. I've been a startup founder myself, and startups almost run away from process, but at some point process has to creep into culture. And I think the third, as you move towards listing, checking the boxes on governance really has to, telling a consistent story, being consistent in your narrative, all of that has to move in. I also think that, perhaps as an ecosystem, we've had many conversations about valuations, numbers. We have less conversations and we reward culture less, from a media point of view. So I think we need to put the spotlight on culture. Remember, many of our startup founders for young Indians are also serving as role models, icons. So I think the element of culture is important. And all of this somehow needs to happen magically without losing the agility that makes a startup, because there is a magic to startup culture also. So it's a trade-off, but it needs to happen. And I think you've got a great model in India already that the old Indian tech industry has given you.
Right. As we wrap up, I think we have a minute or two left. I'm just going to request both of you to give us perhaps one big idea or trend as we discuss this shift of capital towards an innovative and sustainable future. Perhaps, Steve, you can give us one big idea or trend, and Radhika can wrap.
Well, I think first of all, again, Radhika, great, fabulous comments about governance and compliance and thoughtfulness about how you do things. Again, great stuff. The biggest trend we see, inspired perhaps by COVID, but it would have happened anyhow, just maybe not as quickly, is the digitization of everything in every way. Even as recently as 2 years ago, not every business felt the urgency to somehow use technology to change their processes or to digitize things. There was a feeling that, well, it's worked well enough. Look at all the information security breaches we've had at companies that are huge companies, but they just haven't focused on the technology part of what they do and how they can do better at it. But everybody now is realizing that, oh my gosh, if we're not highly proficient at digitizing key processes or the entire product, if we're not incredibly good at information security and guaranteeing the safety of our systems, then we're not going to survive in the new world. And that's probably the biggest trend we've seen.
Radhika?
I won't forecast a trend, but I'll tell you something I'd love to see, and it links back to a previous question. I think we have a lot of startups, without taking away credit, that build for 20% of India. But as you said, Bharat is very underserved and there is a large population of new internet users. So while we can have lots of e-commerce and beauty and food delivery in 10 minutes and 5 minutes, and that's all lovely, I'd love to see more businesses, mainstream businesses, build out for this new consumer base. As Steve talked about digitization, one place I'd love to see more digitization is healthcare.
Oh yeah, here in the U.S. As well. Telemedicine's here, but it's still a little bit 2G, and doctors aren't all bought into that. You're exactly right. We have several investments in the healthcare space, and that's a huge opportunity.
I mean, lots of people, Steve, can give me grocery in 10 minutes, but I'd love to see healthcare come to me, a little more efficiently.
Radhika, we recently had an ambulance startup that brings an ambulance to your doorstep in 10 minutes. So I'm hoping there is change in the right direction, and we solve for real problems than getting coriander in 5 minutes. But I'm sure startups will not let us down, and this is definitely going to have a huge second order and third order impact on the Indian economy as we navigate this decade. But on that note, thank you so much, Radhika and Steve, for giving us your insights and perspective on this crucial topic. Thank you for joining us.
My pleasure.
Thank you.
Well, there you go. The future truly looks bright in terms of not just coriander, but actual real-world problems of healthcare and more being addressed. Thank you, Chandra, Steve, and Radhika, for a thought-provoking session. The startup wave in India has unleashed a new wave of investors. With the new startup listings, the question is whether there's enough demand in the market. A deeper look at how inflation has just surprised everybody, not just the size of inflation, but the consistency of it month to month to month. Now, this is going to take a massive toll on the valuations of companies in the years to come, and it's truly a wait and watch.